This conference will now be recorded.
Okay, in the yesterday's session, we talked about the overview about currencies in different countries and accounting principles to be used. That is clear for everyone.
Yes.
Local currency, group currency, hard currency, and then two accounting principles, leading ledger, non-leading ledger. Now let us write some financial transactions and see how we will make financial figures from this. Your trial balance, P&L, balance sheet. Let me write transaction. I'll say capital, purchases, sales, salaries, other income, fixed assets, bank loans. Let's say this is my transaction. Based on the transaction, we have to decide what is your transaction currency, what is your transaction amount. Let's say I'll put currency. This is INR. This is also INR. This is also INR. This is also INR. I'll say this as SGD. This one I'll put as INR. Bank loans I'll put as AUD. Clear? How many foreign currency transactions we have?
Two.
We have two foreign currency transactions. All right. Now I'll say amount. Also some 8 lakhs, 6 lakhs, 7 lakhs, 40,000, let's say 80,000, 2 lakhs, 3 lakh 50,000. Let's say these are my transaction amounts. Clear these 3 points? Any doubt in this?
No, sir.
Now, next thing is to write accounting entry for this. You will have to put a debit, you will have to put a credit. What is the accounting entry that we are going to write for capital? What will be debit? What will be credit?
Cash to capital.
Cash pay, cash debit,
Cash to capital. Let us assume everything is cash transaction. Debit will be cash, credit will be capital. For purchases,
purchase debit,
Purchase to cash.
purchase to cash, correct? Sales,
cash,
Cash to sale.
cash and purchase, cash,
cash to
cash
sales.
and sale.
Salaries,
Salaries to cash.
salaries to cash. Other income,
Cash to other income.
cash, and then I'll say other income. Fixed assets,
Fixed asset to cash.
fixed assets, cash. Bank loans,
Bank loan to cash.
Bank loans. Yeah.
bank loan, which means you have taken. This is a liability.
Cash
Okay,
to
okay.
bank. Cash
Cash
to bank.
to bank.
Okay.
Cash to bank loan. Now these are the accounting entries. Now first you have one currency here. Now what is this currency called? What is this currency called?
Company code currency.
Sir.
Not company code currency. If it is company code currency, it should have been in the same currency.
Document currency.
Document currency.
Document currency.
This is called as your document currency or transaction currency. Clear? This is called as your document currency or transaction currency. Now, when you write accounting entry, cash to capital, you are going to write the value in document currency first. Based on the document currency, which currency is updated?
Local currency.
Based on the document currency, local currency will be updated. I'll put currency, I'll put amount. Now, for local currency to get updated, what is needed?
We have to
Document currency.
configure.
So, first of all, what is our local currency?
INR.
INR.
Is it fixed or is there any change for any scenario?
Is
It is fixed.
It is fixed.
This
It
is
depends on company code, sir.
right. So, for our company code, Dell India, INR will be fixed. Is that correct?
Yes, sir.
Now, how system is going to bring the local currency amount? It will first look at your document currency. If your document currency same as local currency, your document currency will become local currency. Am I correct? There is no conversion if your document currency is INR. Is that right?
Yes, sir.
Yes, sir.
So if this is same, I am going to put the same here. I'll copy, paste everywhere. But there are certain places where the document currency is not INR. What are those? One is other income,
Other income,
bank.
bank loans.
bank loans. These two are not in INR. So system will not bring the same number here. If your document is in different currency, your local currency is some other currency, what will system do to bring the local currency? It will do currency conversion.
Yes.
Yes, sir.
Right. Now, if you look at other income, in which currency it is currently available?
Yes.
Singapore dollar.
GD.
This is available in GBP. Now, to do this, what we need? You need exchange rate of which currency pair?
SGD to INR, INR to SGD.
Right. Now, let's say exchange rate. Now, this is mandatory. In this exchange rate, you have two pairs. First one is SGD to INR. Second one is AUD to INR. Is this correct?
Yes, sir.
Yes, sir.
Now, let's assume this rate is somewhere around 60 rupees. This is somewhere around 55 rupees. Okay, this is around 50 rupees. This is around 55 rupees. Now, whenever you talk about exchange rate, your exchange rate is always represented in terms of local currency. In terms of which currency?
Local currency.
Local currency.
Local currency. If I'm talking about Singapore dollar to INR as 60, I do not mean $60. I mean 60 rupees. Is that correct?
Yes, sir.
When I say SGD to INR 60, this 60 is representing INR or 60 is representing dollar?
INR it is.
It is
This is
representing INR.
representing INR. So in short, we mean 1 Singapore dollar is equivalent to 60 Indian rupees. When you update this exchange rate, you have to first know at which pair this rate is given. In most of the cases, this is given from foreign currency to local currency. Very rarely we will talk from local currency to foreign currency. Any exchange rate that you represent is always represented in foreign currency to local currency conversion form, because you do not have any need to convert your local currency to foreign currency. That is a rare instance. Majoritarily, you will be doing foreign currency to local currency as your measurement. If I know Singapore dollar to INR is 60, I have to update this in system. To update this rate in system, I have two rates. One is direct quotation, other one is
Direct quotation.
indirect quotation. Now, direct quotation is always multiplied. Indirect quotation
Divided.
divided. Is this correct?
Yes.
When you talk about updating exchange rate, we have to update the exchange rate always as a pair, not as a single line. You have to update for both pairs. Now, how many lines we have to update in SAP? First, you have to put what? SGD to INR. Next,
INR to ST.
INR to SGD. This is mandatory to be remembered. Okay, if somebody is asking you how do you maintain exchange rate for Singapore dollar to INR if the rate is 60, if you tell only one line, you're wrong. You have to tell both the lines. Singapore dollar to INR, INR to Singapore dollar, you have to talk about direct quotation, indirect quotation both. Now, what is the rate we talked about? 60. Now, this 60 is from SGD to INR or INR to SGD?
SGD to INR.
SGD to INR. So, in SGD to INR, you have to put this as direct quotation 60. Which means whenever you are trying to convert from Singapore dollar to INR, system will take your Singapore dollar and it will multiply that with 60, whatever is updated in direct quotation. In case if you are updating transaction in INR, you want to convert Singapore dollars. Now, I do not know or nobody will tell me what is INR to Singapore dollar. Anybody will give you only single rate, 60. Am I correct?
Yes, sir.
The other way around, nobody talks. Everybody will talk about 60 only. It is our understanding that we will convert in reverse way also. To do a reverse calculation, you do not have to do anything. Simply take the 60, put this in where? Indirect quotation. In both the sides, you will be updating same. Once you are taking this as direct quotation, on the other side, you are taking this as indirect quotation. So anything that you take indirect quotation, how this is identified? How will you identify if an exchange rate is updated as direct quotation or indirect quotation? On what basis?
Slash.
It will be slash. So when you see the exchange rate, if it is SGD to INR, if you maintain the value in the direct quotation, it will show 60. If you maintain the rate in indirect quotation, it will show slash 60. Is this correct?
Yes.
This is how system is going to represent in your system. By looking at this, you have to understand, okay, this is direct quotation, this is indirect quotation. Don't just look at the number, look at the number along with the sign, because you have two type of rates, direct quotation and indirect quotation. Sometimes user will forget to update in the direct quotation, they may put this in indirect quotation. System will do wrong calculations, your conversion will go wrong. Okay, sometimes when they say exchange rate is not coming properly, first thing that you have to do is come and check in your exchange rate table whether the data is maintained properly or not. Now, according to this 60 rupees for exchange rate, what will be the value here?
60 into
1 by rate of amount.
Are we
80,000.
converting from SGD to INR or INR to SGD?
INR to
SGD to
SGD.
SG INR.
INR to SGD or SGD to INR?
SGD to
SGD
SGD
INR.
to
to
INR.
INR.
SGD to INR. If this direct indirect is getting
80,000.
confused, you remember these two. LC to FC or FC to LC. Foreign currency to local currency to foreign currency. Based on your company code, you will have to decide what is your local currency. For our company code, in our example, what is our local currency?
INR.
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 If you are converting from INR to any number, you have to do a divided by 1 divided by exchange rate multiplied by your value. Correct?
Yes, sir.
But in case if you are directly converting from any foreign currency to INR, straight away take that exchange rate, multiply with your foreign currency. Now here, are we converting LC to FC or FC to LC? Local to foreign, foreign to local.
Foreign to local.
Foreign to local.
Foreign currency to local currency means always you have to multiply the exchange rate. So I'll take Singapore dollars. I'll multiply this with 60 rupees as my exchange rate. This is what the value. Is this correct?
Yes, sir.
Similarly, AUD. For AUD, we thought exchange rate is 55. How you are going to convert this? This is again foreign currency to local currency.
Yes, sir.
Yes, sir.
So I have to take my foreign currency, multiply this with the exchange rate 55. I will get local currency. Let me reduce this huge number. Okay. Now, are these local currency figures clear? Any doubt in this?
Yes, sir.
Clear, sir.
Next one, let us update the next currency. What is the next currency we have?
Group currency.
Group currency.
Group currency. What is your group currency? Is this fixed?
Yes, sir. It is fixed USD.
USD.
Group currency is fixed dollar every time. I'll take dollar. This is fixed every time. Now, for this, is this fixed logic or you have to configure the logic for group currency conversion?
It is fixed, sir.
It is fixed by the system or fixed based on your configuration?
Fixed
My
based on
configuration.
configuration.
But we
Fixed
have to
based
do
on your
directly.
configuration. In the configuration setting, you have to maintain from which currency your group currency will be converted, either from document currency or from local currency. You can convert total group currency only from local currency or total group currency only from the document currency. Either of this one you have to consider. Which one you are going to take is going to be maintained in the configuration. Which one we will be considering in general?
Local currency.
Local currency.
Local currency is considered. Now, in local currency, do you have same currency everywhere?
No.
Yes, sir.
In local currency, is it
Yes.
same currency?
Same currency.
Yes,
What
sir.
is it?
Yeah.
INR.
INR.
In group currency, it is the same everywhere. Now, which currency combination exchange rate we require here?
INR.
INR.
INR to
USD.
dollar. In short, we need dollar rate. Agree? You call it as
Yes.
dollar rate. You always talk with foreign currency only. If I'm dealing with two currencies, INR and then dollar, I don't need any conversion for INR. I need conversion to dollar. If my data is in dollars, how will I bring it to INR? I need dollar rate. If I say dollar conversion rate is 80 rupees. The moment I tell 80, you will understand $1 is equal to 80 rupees, not 1 rupee is equal to $80. Am I correct?
Yes.
That is how anybody will tell dollar rate 80, 75, 76. Nobody will tell you
Yes.
0.17 today, 0.18 today, 0.20 today. Everybody will tell 80, 75, 76 with that number only. Which means you have to understand that exchange rate is always represented in foreign currency terminology, and you have to put this in a proper way according to the combination that you are converting. If you are converting from local currency to foreign currency, the way you calculate is different. If you are converting from foreign currency to local currency, the way you calculate is different. In this case, if the exchange rate is 80 rupees, okay, here I'll put USD at 80. How will I convert this number?
Hmm. 80 divided by
8 lakhs into 1 by 80.
80.
This divided by 80. Why we have to divide this? Why not multiply?
We can do multiply and we can also take price.
Right? If you do multiply, your number is not correct. Right? The conversion is wrong. Right?
Okay.
Dollar
It will come.
80 rupees, and then your conversion is local currency to group currency. From local currency to group currency, or from local currency to foreign currency, you should always do a divided by.
Okay.
Now here also I'll take this number divided by exchange rate 80. Here also divided by 80. Sorry. You are able to understand, right, how we are getting these numbers?
Yes. Sir.
Here also this value divided by 80. This value divided by 80. Okay, this is my group currency. Now for this transaction, did we put the transaction figures in three currencies: document, local, group?
Yes, sir.
No.
Yes, you have transaction here, capital purchase. You have amount in document currency. You have amount in local currency. You have amount in group currency. One transaction. Now, do we have three values, three currencies?
Yes.
Yes, sir.
Now, when you post these entries in SAP, you are supposed to get exactly the same numbers. Your input is only this. System automatically takes local currency as these numbers. System will automatically take group currency as this number. You don't have to feed this number and this number. Okay, now from this, let us prepare a trial balance. Now everybody knows how to prepare a trial balance,
Yes. Sir.
Yes, sir.
right? Everybody is clear how to prepare a trial balance. So what I am going to do, I am not going to prepare trial balance. Straight away, I will prepare PNL. Straight away, I'll prepare what? PNL. Now to prepare PNL, I need account. What else is needed to prepare PNL?
Expenses, income rate.
Income.
So I need expense, I
Amount.
need income. Put amount, then I'll put amount. Here I am going to highlight all the expenses let's say with this color. I'm going to find out all my expenses with this color, or simply let's put green color. Where are my expenses? Is this my expense?
Yes.
Yes.
This is my expense. Anything else?
Salary.
Salaries.
Salaries. Anything else?
That's it.
That's
No.
all. Now income, let us identify income with, let's say, blue color. Where are your incomes?
Sales.
Sales, other income.
Sales and other income.
Sales and other income. Sorry, I think let us highlight in the accounting entries, not here. Okay, where are our expenses? This is your expense. This is our expense. From the accounting entries, let us identify. This I'll put as accounting entry. Income. Income, let us highlight with blue color. Sales is your income. Anything else?
Other
Other
income. Other incomes.
Other income. Anything else?
No.
That's one.
Okay. Next one, we have to prepare balance sheet. In balance sheet, you need
Liabilities. Assets.
Liabilities, assets.
Liabilities amount.
okay, all the liabilities, let us highlight with yellow. All the assets, let us highlight with orange. Now, where are your liabilities?
Capital.
You have to look at accounting
Capital.
entry and then
Capital.
mention. Capital is a liability, so I'll put orange here. Next,
Bank loan.
Bank loan is
Loans.
a
Bank
liability.
bank
loan.
loan. Correct. Any other liability?
No.
No other.
Assets?
Fixed assets.
Sorry,
Fixed assets.
Fixed assets.
we have put wrong colors. Let me change this.
Both.
Okay. Cash is an asset. So wherever you
Yes, sir.
have cash, let me highlight this as an asset. Fixed asset is also asset. Now from your accounting entry, all your transactions or all your accounts, are we able to map as expense, income, asset, liability?
Yes.
If you prepare P&L, in which currency are we supposed to prepare P&L? You
Local currency.
INR.
Local currency.
have to prepare in both INR, dollar. This also INR, dollar. Am I clear?
Yes.
Because you are reporting in two currencies, you have to submit your reports for both. For both,
Local currency, group
what
currency.
accounting principles?
IFRS and ICA.
IFRS and ICA.
IFRS, ICA.
Now I'll take these expenses. I'll take purchases. I'll take salaries. I'll put these two here. Next, purchase and salaries. I'll take value from here. This is my INR and this is also INR. I'll copy this value. I'll put this here. Are these correct?
Correct, sir.
Now similarly, I need a dollar value of also. I'll take dollar of purchases, dollars of my salaries. These two values also I'll keep here parallelly. Next, under income you have sales and other income. I'll pick these two. I'll place this under income. For sales, this is my INR figure. For other income, this is my INR figure. I'll put this in the INR column. Now we also need dollars. I'll take this dollar value, this dollar value. Is this clear so far what I did on the Excel sheet on the P&L side?
Yes, sir. Clear.
Yes.
Yes, sir.
Whatever the entries we have made, we have highlighted expenses, we have highlighted incomes. We are simply taking all expenses, all incomes in both currencies, INR figures and dollar figures. Now let us identify whether we are making profit or loss, for which we have to do a total of two sides, total debit and total credit. Which side is more?
Income
Income is
side
more.
is more. You'll get profit, sir.
Now first let us talk from the INR point of view. If you talk from INR point of view, what is the financial result? In INR, what is the result? Look at this, look at this.
Income is more than expenses.
Income is more. So are we getting profit or loss?
We'll get
Getting
profit,
profit.
sir.
You will get profit.
Profit, sir.
You will get profit. So what will be your profit? Let us calculate here. So this is your income, which is more, minus this is your expense, which is less. This is the difference figure. Take this number, put this number here. Now are these two matching? This and this?
Matching, sir.
Yes.
Right? Now we got our profit as this value. You're on profit at this side. On the other side with the dollar, what is happening? Which side is more, income or expense?
Income, sir.
Income side is more.
So I'll take income in dollars minus expenses in dollars. If I do a total, I am getting profit of $60,750. This I'll put here. Now is this matching?
Yes, it was not.
Now this is your P&L. Is P&L clear? How we prepared this P&L?
Yes.
Yes, sir.
Now next let us
Debit,
prepare
credit,
balance sheet.
matching, match.
Let us prepare balance sheet. To prepare balance sheet, first thing that we need is we have to find out closing balance of any account which is appearing more than one time. Which account is appearing more than one time?
Yes, sir.
Cash.
Yes.
So cash closing balance. Okay, so that you will do by doing debit and credit. Sum of your debit balance and credit balance will give you closing balance. Let us identify what is your closing balance of INR and dollar. For that, I need INR debit side cash accounts. Cash account is there on the debit side here. I'm selecting INR. Here is second cash, debit side, third time on the debit side, fourth time on the debit side. Correct? So in short, I will do a
Yes,
formula.
sir.
I'll select this plus this one plus this one plus this one. Is this correct? You see, these are the cash that we have selected. Did we
Yeah.
select the correct
Total 4,
values?
right, sir?
Yeah.
Correct.
This is the total cash. Let us select credit side cash transactions. This is your credit cash. This is your another credit cash. This is your third credit cash. This is the total of this. If I find out the difference, I have to deduct debit minus credit.
Yes.
This is your closing balance. Similarly, we have to find out dollars in closing. So for dollars, this, you clear what I'm doing?
Yes, sir.
Everybody
Yes,
is
sir.
able
Yes,
to
sir.
understand that how we are calculating this number. I
Yes.
am calculating credit side, this plus this plus this. Now if I find out my closing cash in dollars, it is this number. Now first I'll put all my transactions, cash, fixed asset. Only two in assets, any other thing? Okay, cash and fixed assets are here. Your cash balance in INR is this, cash balance in dollar is this. I'm not going to take from your accounting entry, instead I am taking from your working that we have done to find out the closing values. Now I'll put these figures here. This is your INR, this is dollar. What liabilities we have? Capital and bank loan.
Bank loan.
Put capital and bank loan. Here I'll put INR, dollar. What is capital in INR? This value. Capital in dollar is this value. Take this number, place this here. Bank loan, this is your dollar figure, sorry, INR, this is your dollar. Copy this, put this here. Are these numbers correct? Anything else to be added here?
P&L brought up.
Net
We have
profits.
to add
Profit we have to add.
profit, we have to add. Copy. I'll put this here, profit. Now when you put profit, or in short when you put your balance sheet, what is the point that we have to remember while preparing a balance sheet?
Negative and positive.
We have to put values in positive, negative. So fixed asset value I did not take. So for assets,
This is the
numbers will
negative
be
value, right,
in,
sir? Profit.
yeah,
Positive.
No, that is the negative value.
no, capital we will have to take which number, positive or credit? If you are
It
not
is
understanding this, what
credit
you
only,
have to
sir.
do, look at your capital. Your capital on your accounting entry is on the debit side or is on the
Credit
credit
only.
side? Capital is
Credit side.
credited,
Credit side.
any credit is a negative number, any debit is a positive number. Okay, capital, it's a credit balance,
Bank
so
loan
I'll put
also is negative.
a negative number. Bank loan also I'm going to make it a negative number. If you get profit, positive or
Profit
negative, your
also
profit?
negative.
Profit is
Negative,
also
sir.
negative. All right. Similarly, for dollars, I'll update the same. That's it. We've updated everything. Now let me do a
Yes.
total for the assets first. This is what I got in my assets. Let me do a liability total. This is what I got in liability. Are these two matching?
Yes, sir. 2 is matching.
Matching, sir.
Balance sheet matched.
Balance sheet is
Debit
matching.
credit is matched.
Balance sheet is matching. Your P&L profit loss also you are able to get, which means the accounting that you have done here, is this correct or no?
It is correct, sir.
Whatever the accounting entries you have taken as an example with your imaginary figures, the accounting entries, currency conversions, your financial end result is coming up here. Now the next activity that we have to do is, once you are clear with this, only then you have to step into SAP. If you are not clear, do not log into SAP. Is this clear for everyone?
Yes, sir,
Yes,
it is
sir,
clear.
it's clear.
Yes, sir.
Yes, sir.
In my side.
Accounting entries, financial
Yes, sir.
result in both local currency and group currency. Once this is clear, next thing that you have to do is, now all this you have done keeping one company in our mind. Which company we kept in our mind?
Dell
Then
Computers.
We kept Dell India Limited, we kept in our mind, or any company name you can take if you want. When you take that, you have to configure your company code in such a way that these transactions are recorded. How many transactions we have? 7. The intention is only to record 7 journal entries in your company code with the same figures, and you have to put some date with same figures with some date, and for all the dates same exchange rate. Now once you do it, once you do this, you do the configuration, you do the master data creation. Only these many GL accounts you have to create. Do not create whatever comes in your mind. Create exactly these GL accounts. Update exchange rate for the currencies that we have in our picture. Next, only prepare the journal entries. After that, look at your trial balance. You don't even have to look at the trial balance. Straight away go check in SAP whether your profit is this or not. Similarly, check in SAP whether your balance sheet asset figure is this or not. For that, first we must know how we will check this. How to verify these figures from SAP once you create your company code and post your transactions. That is very important. If you are able to post these entries, pull the same number from SAP. Half of the SAP you have already learnt. The remaining is only config part that you can also learn your own. But everything is dependent on this. Any entry that you post will have to be updated in both the currencies, will have to be reflected either in P&L or in balance sheet. Let's say if I post one more entry like bank debit, cash credit, how will this impact my financials? Will this entry impact my P&L or my balance sheet or both?
Are both.
balance.
Hmm? This will impact my P&L or my balance sheet or both?
Balance sheet. Both it will be
This is
impacted.
only going to impact balance sheet because bank is which account? P&L, balance sheet.
Balance sheet.
Balance sheet.
Cash,
Balance sheet.
Balance sheet.
Balance sheet.
Balance sheet.
If your accounting entry is going to hit both the times balance sheet, debit is going and hitting balance sheet, credit is also going and hitting balance sheet. So there will be only a balance sheet impact. Your P&L is untouched. If I say this is, let's say, 2 lakhs and this is 2 lakhs here, what we will do, you will be adding 2 lakhs on the liabilities or on the assets.
Assets, sir.
Assets. So I'll say 2 lakhs plus 2 lakhs negative. Now what is the sum of this? Total of
Same
this is
only.
what? 0. This is just a reclassification kind of entry.
0.
Within the assets side, the data is being moved. In case if you have a transaction, bank debit or miscellaneous income credit, what will happen to this? This is a P&L account, correct?
Yes, sir.
Yes. Yes, sir.
If I say this as
It will impact on
some
profit and loss account, balance sheet.
3,000. Now this will have impact on my P&L, my balance sheet. I have to add 3,000 to my income side, which will increase my profit by 3,000. This profit will be added here and then your balance sheet will get tallied. If you pass one entry, how this entry is affecting your accounting, you must be aware of. Clear? Otherwise, we will not be able to understand why numbers are keep on changing. What kind of entry will create what kind of impact on your financials, you must at least have basic understanding. If you have this basic understanding, you can confidently talk to your business, you can confidently talk to your users and your client. Okay, when somebody is talking to you at the month end, they will be more specifically talking about these kind of reporting. My MIS report values are not correct, my P&L values are not correct, my balance sheet numbers are not correct. So many things they will talk. And they will not be convinced, they will not be satisfied unless they feel that their P&L is correct, their balance sheet is correct. Now everything is dependent on your data entry, debit credit that we are posting, correct? If your debit credit
Yes.
accounting entry is correct, everything is automatically correct. If these are wrong, if you are posting without any reason, if you are posting just like that, whatever comes in our mind, without any figure, without any conversion rate, if you are not able to verify this, is there any use that we have configured a company code, we have configured different business processes, we have checked the report? When you are
No, sir.
checking the report, do not
No
check
use.
if report is giving output or not. Most of the people will check, they go to a report, they will give the account, company code, they'll click on run, execute, it will give an output, they will say that my report is working. But did you verify the number that report is giving you is correct or not? Did anybody validated that? At least try to understand how to verify how system numbers are coming. That is what we have to do at the beginning. Once you know the logic, once you understand how numbers are coming, how your report is being updated, then you don't have to check. But you need to check until you have the confidence, until you get the logic. Now, if you see that the same number you are able to bring from SAP, you will be confident or not confident?
Confident.
Confident.
You'll have confidence, right? You know that, okay, what you have done, what was your understanding, what was your thought process at the beginning, at the end, you are able to bring the same financial figures from SAP. Now, tomorrow, if anybody is asking you how you will create a new company code, you have to tell the same points. This is your first level of practice in your SAP. In SAP FICO, this is what the first thing that you will have to do. Later on, there is one more activity. Is this clear? This is the activity to be done from the scratch, like from the initial business transaction onwards. Next one that you are going to do is legacy values upload. What do we mean by legacy values upload? Non-SAP system to SAP or SAP to SAP? In short, in your
Yes, sir.
implementation or in your rollout.
Yes.
Now, I'll take the same figures. But this time I am going to do it in a different way. But before I do this, any confusion in this? If anybody has a confusion in this, we'll not be discussing this now because this will lead to more confusion. If you are clear with this, then I'll explain that.
Clear, sir.
Clear, right?
I have a
Hello.
question.
Yes.
I'm not clear about this conversion rate. How you're checking for means when we need to multiply and when we are dividing. Can you just clarify that? It's FC to LC and LC to FC. Yeah, that is that part. Yeah.
First thing that we'll have to do is we have to know what is our company code. In our example, what is our company code?
DEIN.
DEIN. So we're talking about Dell India Limited. Clear? Huh? And the next thing that you have to know is your company code currency. What is your company code currency?
INR.
INR. Clear with these 2 points first?
Yes.
Now here you put LC. What is your LC?
INR. Local currency.
LC is local currency. Local currency is INR. Now if you are talking about this company code, your LC will always remain INR. Am I correct?
Yes, sir.
Yes.
Now assuming I am doing a transaction or my transaction is in GBP. My transaction is in GBP. Now here you have to put FC. What will be your FC foreign currency?
USD.
GBP.
GBP. Okay, your transaction is in GBP. So your foreign currency will become GBP. Now here you know that you have a transaction in GBP. You know that you have a local currency of INR. Now there are two possibilities of conversion here. One is INR to GBP. Other one is GBP to INR. Are these both possible or not?
Possible.
Right? I can purchase in GBP or I can also sell in GBP. Yes, no? I may have a customer with GBP. I may have a vendor with GBP. Now both are possible, but when you know the GBP exchange rate, you will only know one rate. Let's say GBP exchange rate, I'll say 106. 106 I am telling is GBP. Whenever you're coming or whenever you're talking about exchange rate, it is always FC to LC or foreign currency rate. This is what rate?
106 rupees.
106. Is this a foreign currency rate or local currency rate? From where?
Foreign currency
You
rate.
should
106 rupees.
always keep foreign currency in your mind because in most of the cases we will be talking from foreign currency point of view. Even in reality, you will talk about foreign currency point of view only. Now, if you know that GBP exchange rate is 106, GBP exchange rate is 106, you have to first write this 106 in the direct quotation of FC to LC. Where is your FC to LC? First one or second one?
Second one.
FC to LC is your second one. Now you will have direct quotation, you will have indirect quotation. Direct quotation is updated in which scenario? Indirect quotation is updated in which scenario? In short, in both you are going to update 106 only, but 106 will be in direct quotation of which case? 106 will be indirect quotation of which case?
INR to GBP correct quotation.
106 will be here. Is this correct or wrong?
Yes,
Wrong.
This is wrong.
correct.
Okay, your direct quotation is always foreign currency to local currency. Where is your foreign currency to local currency?
GBP
First
to
or
INR.
second?
Second one.
Second one. Here you have to
GBP to
put
INR.
106 and here you have to put 106. Local currency to foreign currency is always indirect quotation. Okay, this along with calculation you will be able to understand on SAP, because in SAP I said you have one screen called exchange rate simulator. There your doubt will get clarified. We will not post any entry, we will update the exchange rate, reverse, ulta and all. Then I'll show you converting the number. Clear? I'll put both the screens side by side, exchange rate screen and your exchange rate simulation screen the other side. We will put the exchange rate maintained and then we will test it. You will come to know if you put direct what is system is doing, if you put indirect what system is doing. Clear? But for
Yes.
now, keep in your mind, foreign currency to local currency is always direct quotation. Local currency to foreign currency is always indirect
Direct
quotation.
quotation.
Okay, I'll put FC to LC is always direct
Direct
quotation
quotation.
and LC to FC is always indirect quotation. Okay, any exchange rate we talk about is always FC rate. What rate?
FC rate.
Foreign currency
Foreign.
rate. Now to put this again one more time. Now look at only these three statements. If I put what is dollar rate, normally what will anybody tell if you ask anybody? What is today's dollar rate?
78.
Now this is what anybody will tell, or anybody will tell you 0.234.
Anybody tell 78 like a value digit?
Anybody is going to tell 78 only. Nobody will tell any exchange rate in decimals, because exchange rate is always one side in this number, the other side it is always in the decimal. So nobody will tell in this format, everybody will tell in this format. Now according to this statement, is this foreign currency rate or local currency rate?
FC rate. Foreign currency rate.
This is a FC rate. Now if I have to put this USD to INR, I have to put INR to dollar. Now I have to put DQ IQ, direct quotation, indirect quotation. This 78 will be placed where in the USD to INR? Direct or indirect?
Direct.
Direct.
This will be direct. This is 78 in case of INR to dollar.
Indirect.
Indirect.
Clear? Clear? Still any doubt?
No, clear.
Okay. Now we talked about something here. Okay, legacy values upload. Now I'll give transaction, I'll give currency. Now for your legacy balance upload, this is what we are going to get. Transaction and then the amount. Here you are not going to, you are going to have accounting entry. You're going to have accounting entry, but this is a different accounting entry. You will put debit, you will put credit. Debit and credit we have to write, but when you write debit and credit, you have to keep a point in your mind. What kind of data is this? This is your legacy data.
Yes, sir. Legacy data.
Yes.
This is your legacy data. Legacy data you always receive in the form of TB. In which form?
TB.
Trial balance. So slowly you have to start using shortcuts. Okay, in real time nobody will talk trial balance full, everybody will talk TB. The moment somebody is telling a TB, you have to understand they are talking about trial balance. Now TB has a rule. What is the rule of your TB?
Zero. Both sides should
TB
match.
should be
Amount should be
0.
matched.
Right. Now this accounting entry, now I'll shift here. I'm shifting this accounting entry here. Now this is your local currency or transaction currency.
Is it
Local.
transaction currency?
This is
Transaction
transaction
currency.
currency
Local currency.
because there are different currencies. You will find SGD, you will also find AUD. If it is local currency, it has to be completely INR,
Same.
right? Now this is your document currency and this is your amount. You also need local currency and then you need the amount. Now for local currency, you are not going to convert the number. For local currency, you are not going to convert the number. But in this case, what I am doing, I am making everything as INR. Because once we get this concept, then we will play with different currency numbers. What we will do in such scenarios. First, let us go ahead with single currency. Now everything is INR.
Yes, sir.
Yes, sir.
If everything
Yes.
is INR, your local currency also will be the same.
Yes, sir. Remains same.
Now for this, I have to ensure this is becoming 0. I have to ensure this is becoming 0. Now I'll copy paste from here. Now here, when you are receiving TB from your client as part of your legacy data upload, you are not going to get debit credit of an accounting entry. Instead, you will get only the account balance. What you are going to get? You are going to get account closing balance. If you see capital as 8 lakh, it is 8 lakh, that's it. You have to post an entry into the capital account for 8 lakhs, that's all. The offsetting account will be different. Now here accounting entries, what you need to do is, now in short, capital will show a positive number or a negative number.
Negative, sir.
Negative number.
Why negative?
The liability.
Because it
Liability.
is liability. Liability always shows a negative number. What about purchases?
Positive.
Positive.
An expense. Negative, sir.
Purchase is an expense. Expense is always debit, positive. Sales.
Negative.
Sales is an income. Income is always credit, negative. Salaries.
Positive.
Uh,
Salary
Positive.
is an
expense,
expense.
expense,
Expense is
expense,
always debit.
debit.
Other income.
Negative,
It
sir.
is a
Negative.
fixed asset.
Okay, fixed asset is positive. Bank loan is negative. Now we have to ensure that this sum is becoming zero. If this is not becoming zero, let us update these values until you make sure that it becomes zero. Now nine double five. Put 975 here. Now is this becoming zero?
No, sir.
Total.
Yeah, 0.
Now this has become zero. I am going to put this same number here. Now this also has become zero. Now this is how you will receive the trial balance, and then you are going to have one more currency. What is that currency?
Group currency.
USD dollar.
Group currency.
Group currency, and then amount. This will be dollar. Now all these numbers will be given to you by your client. The whole trial balance will be shared by your client, and from there you have to do the data upload. Group currency, sometimes your client will give you, sometimes your client will not give you. He will tell one exchange rate, he will tell please convert with this exchange rate. Let's say your client had given exchange rate of 78. For dollar he said please convert all the local currencies at 78 rupees and upload in dollars. He has shared only local currency trial balance INR, and he is telling you that dollar please convert at 78 rupees. So you have to convert the dollars at 78. Now dollar at 78 means, is this local currency to foreign currency rate or foreign currency to local currency rate?
Local to
Foreign
foreign.
currency to
Local to foreign, sir.
78. Somewhere we have written one line here.
Foreign to local.
Any exchange rate we talk about is always what rate?
Direct quotation.
foreign.
Foreign
Foreign
currency
currency.
rate. Now for foreign currency rate, to local currency and local
70.
currency rate to foreign currency. Now in our requirement, we have to convert from LC to foreign currency or foreign currency to local currency. What is our requirement now?
Foreign currency to local currency.
Local currency to foreign currency.
Our requirement
Foreign
is to
currency local.
identify dollars. Dollar value is not there, so you have to convert dollars from local currency. Local currency to foreign currency. Local currency to foreign currency is multiplication or divided.
Division, sir. Divided.
Divide.
It's a division.
Divide.
So
Division.
what is your rate?
78.
So I'll take this by 78. Similarly, this divided by 78, this divided by 78. Clear how I'm getting these numbers? This divided by 78, this divided by 78, and then this divided by 78. Dollar is only two decimal. Make sure you are keeping only two decimals enabled. Now if I do a total, it has to become 0. Did this become 0?
Yes, sir.
Right? Your client is not going to share these numbers. He will only tell, please convert group currency or my dollar values at this rate. So you have to manually convert and then update the system. Now this trial balance, whatever you got from your client, will have to be loaded as it is in SAP. Will have to be loaded as it is in SAP, for which your accounting entry will be different. Okay, what accounting entry you will be writing? First, you have to look at the transaction. What is the first transaction? Capital.
Capital.
Now look at the capital value. Is this positive or negative?
Negative value.
Negative
Negative.
means debit or credit.
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 Positive value means debit. Okay, and then negative value means what? This is blind rule that you have to remember in accounting. Any positive number that you look at is a debit. Any negative number that you look at is a credit. Now considering these two blind rules, capital, look at the amount. Is there a positive number or a negative number?
Negative.
Negative is debit or credit.
Is a credit.
Take this and put it on the credit, forget the debit. Your trial balance will only tell you one leg. So you put your trial balance account either on the debit side or on the credit side based on the account balance. If your account on the trial balance shows debit, put this on the debit side. If your trial balance shows a credit balance, take this on the credit side. Am I clear?
Yes, sir.
Yes, sir.
Now the second one, purchases. Where should I take this?
Debit.
Debit side.
Why debit?
This is
Positive value, sir.
positive. Always is debit side.
One sec. This is debit because it's a positive number, always debit. Sales,
Credit, sir.
credit. You're able to understand why I'm putting on the debit credit?
Yes, sir.
Yes, sir.
Salaries,
Yes, sir. Debit.
salaries is debit. Other income,
Credit.
other income is credit, correct? Fixed assets,
Debit.
debit. Bank loans,
Credit, sir.
bank loans is a credit. Okay. Now, if you look at each of this, everywhere there is a missing figure.
Yes, sir.
In every line, there is a missing figure.
Yes.
Correct? One side is
Opposite.
missing.
Yes, sir.
Yes.
Everywhere there is a missing. Now, you will have debit, you will have credit. Now, debit will always gets offset with what? Credit. Is my statement correct?
Yes, sir.
Now, debit. Here I'll put credit. Now,
Yes, sir.
if you have debit and no credit, and similarly, if you have credit and no debit. Now here offsetting account is missing. Is this what we tell in general?
Yes, sir.
If you have debit but there is
Yes.
no credit, you will tell this offsetting is missing or offset account is missing. Similarly, if you have credit but you do not have a debit, you call it as offsetting account is missing, but you will never tell debit is missing, you will never tell credit is missing. Instead, you will tell offsetting account is missing. Now, if I look at the first one, do you have full debit and credit or something is missing?
Debit is missing, sir.
Debit is missing. So in the debit, you need to maintain one offsetting account. Which account?
Offsetting.
Offsetting, sir.
Offsetting account, because you do not know which account to be placed there, whether cash, bank, capital, rent, salary, whatever it is. Are you sure what to be placed there on that blank?
No, sir.
You do not know. That is why you will never tell which account is missing. Instead of that, you will be using offsetting account is missing. Okay, to identify which offsetting account is missing, you have to look at the transaction. Based on the transaction, you will decide which offsetting account is to be placed there. Now, what is the activity that we are doing here? Legacy value upload.
Yes, sir.
For legacy value upload, always you will receive the trial balance from your client. Which balance?
Trial balance.
Trial balance.
You will receive the trial balance from your client. From your trial balance, you will always come to know one side of the entry. From your trial balance, you will come to know how many sides? One or two? From your trial balance, you will come to know one side of the entry or two sides of the entry.
One side, sir.
Only one side, sir.
From your trial balance, you will always know only one side, either debit side or credit side, because
Right.
your account in the trial balance cannot have both balances. Either you have to put a debit balance or you have to put a credit balance. If you put debit balance, your account is debited. If you put credit balance, your account is credited. Is this point clear?
Yes, sir.
In trial balance, if the amount is positive or if the amount is on the debit side, in your journal entry, you are going to take it on the debit side. Credit side will be missing. Similarly, if you have credit side, your debit side will be missing. Now, from this legacy balance upload, first thing that you have to do is look at the transaction, make sure amounts you have taken, total of the amount is becoming zero. This is the first point. Once this is done, in the accounting entry, whatever the account you have on your transaction, take it on the debit or credit based on the account balance. Debit balance, put it on the debit side. Credit balance, put it on the credit side. This missing thing, offset account for TB or opening balance is always taken into which account? Migration or takeover account. Which account you will take this balance into?
Migration or takeover.
You will be taking into either migration account or takeover account. Now here you have to fill every blank with which account? Either takeover or migration. Let's put takeover. Here it will be takeover, 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 takeover. Clear? If you put any implementation project on your resume, this is mandatory question. How do you upload or how do you bring your client legacy balances into SAP? What entry you are going to pass for it? How do you decide which accounting entry is to be posted? This is straightforward. Your trial balance will tell you one side of the entry, debit or credit. Every line of your trial balance will have a missing debit or a missing credit. Like here we have highlighted. Clear? Now this missing debit or missing credit is filled up with one account called takeover account or migration account. Which account?
Ajay, good morning. Sorry
Yeah.
to disturb you. I have a query here. See, if I am doing some capital investment CWAP project, for example, I am doing AUC. Every month I am settling to AUC. Okay, in that case, my capitalization not yet happened. That means my fixed asset has not built, completely not done my project. Now, in that case, I am in migration stage. What I have to do?
You will have to migrate with AUC asset only. Whatever the value you have, you will show in the AUC, capitalization under progress or capital work in progress. But for this, you will have a dedicated GL account. Like you have fixed assets here,
Yeah.
you will have AUC assets or CWAP assets. Another GL account will be there to accommodate all your capital work in progress or asset under construction.
Okay.
And you will be able to settle those AUC assets on SAP.
But normally, AUC assets we will be not able to post manually, no? That will come from another object from where that debit is happening.
Correct. So for this, what we will do, we will be uploading the data at detailed transaction level. Here we are only going to talk about the accounting entry.
Okay.
The cutover for your fixed asset is a different activity. Similarly, cutover for your customer, cutover for your vendor is a different activity.
Okay.
Okay, so there I will explain how you will segregate all your fixed assets.
Okay.
Okay, so here we are only trying to understand the accounting entry of your migration.
Okay.
Okay.
Thank you.
Yeah. Now, these accounting entries, any doubts, anyone?
Sir, what account is this, sir? Takeover account.
Takeover account is now you created GL account groups in OBD4, cash, bank,
Yes,
asset,
sir.
liability. In that OBD4 account groups, you will have to maintain one more account group as mandatory called takeover accounts or technical accounts, which will either begin from 8 series or from 9 series. Most probably we will be using 8 series GL account for takeover.
The red series means, sir.
Your assets account number you're starting from 1 series, liability you're starting from 2 series.
Yes, sir.
If you, while creating chart of account, you have a logic, right? Any 1 series number is representing my asset, any 2 series is representing my liability. Likewise, we will decide a logic, so that by looking at the first digit of the account number, you will identify whether this is a expense related entry or asset, liability or income.
Okay, sir.
Okay. Now this is mandatory in every organization. If you are implementing SAP, if you are bringing data from non-SAP or SAP to another SAP system, your data migration activity is must. For data migration, you will receive the trial balance. Trial balance will give you only one side of the accounting entry, either debit or credit. The missing side, the offsetting account, to load your data into SAP, you will be using takeover account or migration account. These are technical accounts which will ensure that the balance is always zero. Now, if I look at these balances, the sum of this balance is zero.
Yes, sir.
Now, if you take these entries, some of your takeover accounts will also be zero, because the same amount, the opposite side will be going to takeover accounts. Correct?
Yes, sir.
All your accounts put together is becoming zero, but all these accounts are getting offset to same account called takeover. Now, when you do a total of your takeover accounts, your balance will also be zero. This entry I will show you on SAP. At that time you will be able to understand. But now I've written this only to make sure when you look at this legacy value upload, you will receive trial balance, and for trial balance you will get tallied account balances of each account, which will be zero, and from this you have to pass a debit credit accounting entry, and you must know how to write the accounting entry for this. You will have one side in the trial balance, the other side will be missing. So you are able to identify which side will be there on the trial balance, which side is missing.
Yes, sir.
And this missing is always replaced by takeover account. It's a standard. Any questions so far on this accounting entry?
No, sir.
Clear everyone?
Sir,
Yeah.
sir, for the takeover, what is the general entry?
For takeover, journal, this is the journal entry.
For
Takeover account
debit,
debit. Now, can we write an accounting entry without debit credit?
yeah.
No.
No.
Can I update any account balance without writing debit credit accounting entry?
No, sir.
No, right?
No.
Now, client is telling this is my existing balances. Please bring these balances into SAP. For us to bring these balances into SAP or into accounting for that matter, you need an accounting entry, debit credit, without which we cannot load any balance, update any balance. Am I correct?
Correct, sir.
Yes, sir.
Now, in order to bring
Sir,
this number into SAP, I must pass one journal entry. Since the data that I got is the trial balance will have only the closing balance. Closing balance will either tell you debit balance or credit balance. If it is a debit balance, you need missing a credit. If it is a credit balance, you need a missing debit. This missing debit, missing a credit is always taken into takeover accounts. And at the end of passing these entries, your takeover account balance will become zero.
Sir, sorry to
This
interrupt you. Due to the network issue, I missed the some part of the session. What about the cash account, sir?
what about? No, I have just written example of some entries. You can write as many accounts as you want in this.
Okay,
If
sir.
you insert any account, make sure that the balance is becoming zero. Keeping that logic, you can add n number of account numbers here. Okay.
Yes, sir.
Now this will be your second activity when you create a company code. So the moment you create a company code, you have to be very clear what is to be done with your company code. First thing is your this activity, and you have to ensure that all the numbers are coming fine. Second thing is this activity without verifying P&L balance sheet. The first one, accounting entry, P&L balance sheet verification. Second one is this activity. Now both these things we will be doing on the SAP once we create our company code for the same numbers. Okay, so this entry explanation I'll explain in the evening session because it takes minimum 40 to 45 minutes for us to understand in detail. Okay, from
sir.
this part we'll do the continuation in the evening to understand what is happening with this takeover, where this will reflect in your reporting. Okay.
Okay, sir.
Yeah. All right then. Let me.
Thank you, sir. Bye, sir.
Okay, we'll connect.